Is he blood? Is he Crip? Is he that? Is he this? It's your boy Crypto Blood. Welcome to another episode of My Two Satoshis. Yes, we're rocking out to that Dynasty album. I had to play this one. Streets is Talking. I heard it the other day. I said, hey, I got to play this one. So this is my song pick of the day. What's good, people? Hope you guys are doing well today out there in YouTube land. We're going to talk about this new consensus algorithm called Proof of Access. I've never heard of it, but when I saw it, I thought that was an interesting take on consensus, and we're going to take a look at that today, as well as this exchange called Bitmex. It stands for Bitcoin Mercantile Exchange. They actually do the most volume in crypto trade, and you'll see why. It's because of derivatives. So we'll take a look at that, see if this is going to be an issue going forward. I've never used Bitmex. I've heard of it, but man, this may be if you guys are skilled at trading, you may want to take a look at Bitmex. I'm going to check it out, but there's an article about them that I want to cover, and we're going to take a look at. But I'm sure many of you saw my tweet yesterday saying that I was officially bullish on Bitcoin, and I'll show you guys why technically. But the market cap currently is at $276 billion, still under 300 billion. Bitcoin's dominance is at 42%, and pretty much green. 24-hour, 7-day window is also green for the top coins for the most part, except for Tezos pre-launch. It was down 50% yesterday on the 7-day view, but it's only down 39% right now. Up 39% for the day, man. There's a lot of volatility going on there as they start to launch their token. So let me show you guys really quickly why I went bullish. And so as you can see here, I actually extended this line, this green line, after I did the post yesterday on Twitter, just to kind of show you guys what we're dealing with. So essentially, I was, basically I extended this line that was part of this pennant, because just because the pennant is, over, doesn't mean that line isn't recognized in the market, and normally it is. So if I would have extended this pennant out as well, you would have seen that because we broke it, it kind of lined up exactly with that support area, that major support area. So we broke that, and that was just extended pressure on the downside after breaking those pennant lines. So if you have pennants that you've drawn, you can later on extend those lines outward to see where additional support and resistance can be seen. So as you can see, we broke to the downside on this pennant, but we came back up, and we've been bouncing above there up until the point where we were losing steam, and we broke right back below it, and we tried to get back up, and then yesterday we got back above that line. And look, this is crazy, man. We are staying above this line right now. We're just teetering right above that line. We may break this line, and if we do, I'm hoping that 6,600 will be our floor now, our support, since we're clearly above it now. We did score a point above this area, which was the previous high, the most recent high in this window here, in this time frame. And really what we need to do, and I think we will at this point, we should be able to get above 68.40. So I'm gonna put a line right there really quickly. So as you can see, where we may come into some resistance is at 6,800, but now I'm hoping that the floor now is 6,600, and I definitely don't see us going lower than 57. I could be wrong, but it does look good to the upside now. That doesn't mean we're gonna go straight up, but I think we're making higher highs and higher lows from the double bottom that we saw right here. So we had a double bottom here, and that should keep us on a good trajectory upwards now. So I'll keep an eye on it, but it's just interesting to see, and this is on the 1 hour, so good to see these types of technicals from a support and resistance standpoint holding up a little bit. So I'll keep an eye on it, people, but that's my take on the charts and the markets, technically speaking. Now the first article is out of Bitcoin News, and it says, is derivatives trading harming the Bitcoin market. All right, so let's take a look at this article. It says here, Bitmex, short for Bitcoin Mercantile Exchange, consistently has the highest trading volume for any cryptocurrency exchange by far, such as $2.5 billion in volume versus Binance's $1.3 billion in volume as of July 5th, 2018. However, Bitmex is usually excluded from cryptocurrency exchange ranks because it primarily trades derivative contracts that represent a certain amount of Bitcoin instead of spot trading actual Bitcoin. Bitmex offers up to 100 times leverage, meaning customers can invest the USD equivalent of 1 Bitcoin into their margin account and buy 100 Bitcoins worth of derivative contracts. Customers have the choice of going long or going short. When going long, the customer holds onto the Bitcoin contracts, and if the market goes up, then they gain on the money. If the customer is going short, they sell the contracts immediately, and the USD goes into their margin account. And if the market goes down, they buy back the contracts for much less money to repay the loan and keep the US profits. Therefore, Bitmex provides a mechanism for people to place large bets on the Bitcoin market declining. Theoretically, whales with large amounts of Bitcoin and other influential people can collaborate to drive the market down and make huge profits by using maximum leverage on their short sales. The 2008 global financial crisis provides an excellent example of how derivatives trading can be extremely harmful. Derivatives based on real estate mortgages proliferated in the years leading up to 2008 and soon compromised a large fraction of the assets that banks, corporations, and investors held. I just want to stop right there. They're kind of comparing leveraged trading of like spot Bitcoin or cryptocurrencies to the derivatives that were traded in 2008. It's not even the same thing. I don't know why they're saying that. It was a lot more to that whole story of the derivatives in 2008. They were complex to the point where the people who made them didn't even know what the hell they were trading. Then you had like AIG adding, AAA ratings to these mortgage-backed securities. So it wasn't just leverage trading of a particular asset. So that's not a great comparison in my opinion. However, it says here that housing prices declined and homeowners defaulted, causing derivatives backed by real estate to become worthless. The derivatives market collapsed and banks stopped trading with each other because banks usually offered derivatives as collateral for loans. The resulting financial crisis was the worst since the Great Depression and was only stopped by world governments printing trillions of dollars into fiat to bail out the corporations and banks at the expense of people. The lesson of this story is that derivatives can appear to have value and be considered an asset, but actually have nothing backing them. Bitmex has up to 100 times more contracts than the actual amount of USD deposited on their exchanges, which could lead to a disaster if Bitcoin's price goes up and Bitmex is forced to pay out the contracts. Bitmex doesn't have the USD to honor the contracts and would have to shut down. I guess this last paragraph here talks about the correlation with why Bitmex and exchanges like Bitmex are bad for the markets. It says here, this makes it suspicious that Bitcoin's price has been going down so constantly while Bitmex volume has rapidly increased. This is the market situation Bitmex needs to survive, and the question whether such players are attempting to manipulate the cryptocurrency prices is something that crops up in everyone's mind now and then. So reading this article, the title really caught me, but I'm gonna have to disagree with this article. Derivatives are fine and are a part of markets. It's just it's a capitalistic type of behavior, and you're gonna see that. So the only way that derivatives will be completely bad for cryptocurrency markets was if like you had a Coinbase or one of those huge Binance where they're playing in these derivative markets and leveraging their money in derivatives, where If one of those exchanges fail, then we would see systemic risk for the rest of the market. So basically, the only way that derivatives will be hugely dangerous to the ecosystem is if we had one of the major big players really betting the house on some of these contracts, basically almost like a too big to fail. But unfortunately, in this market, we wouldn't have a government come bail them out. So that would really hurt a lot of people. So that to me is the only way. This article comparing spot derivatives that Bitmex trade to the mortgage-backed securities, the MBS derivatives from 2008, is nonsense. It's nonsense. So you guys let me know what you think about this article. I think they're blowing it out of proportion. But hey, if you know how to do it, the derivatives can make you a lot of money, especially in these types of markets. You know, in my trading room, I only do long sell trades. But I was telling my buddy this morning, I'm like, man, I'm you know, with the signals, when you're trading in a bear market and you're only long sell, then what you're trying to do is mitigate your losses as much as possible versus hodling. So if you would have hodled, then you would have lost 50% of your money, 40% of your money, versus losing 15, 20% of your money getting in and out of the market. On the other hand, if we were shorting, and you know, shorting is very dangerous in these types of volatile markets as far as cryptocurrencies. But if we were shorting, you would not only be managing and mitigating your losses, you would be actually making money, because we can make money on the downside. Derivatives are good for people who know how to use them and can be very profitable in these types of markets. So guys, let me know your thoughts on that. Bitmex. Is Bitmex really an issue, a threat to the whole cryptocurrency market? I don't think so, to be honest with you. They may go out of business, but it's not going to take down the whole markets like those MBSs did back in 2018. But second article, have you heard of proof of access? If not, it's time you did. It says here, blockchain has long been praised for its secure structure and extreme resistance to hackers and corrupt parties. In fact, some would even go as far as to describe blockchain, when done properly, as unhackable. Whether that's true or not, there's no denying that the technology is one of the toughest out there when it comes to keeping data safe. Despite this, blockchain isn't perfect, and there's still a lot of room for improvement in this young technology. One of blockchain's key features, and the reason for many of its advantages, is the way that new blocks are generated. The process of mining new blocks is done totally democratically and ensures that no third party can take control of the blockchain. But current mining and validation methods have some serious drawbacks. Mining is not an eco-friendly process at all, and can also be frustratingly slow and costly. What's more, it can make blockchains difficult to scale. So in order, it says here, for blockchain as a technology to grow and be accepted by the mainstream, we need some new approaches to this process. First, let's take a look at the current models. So it kind of goes through mining, you know, how we know as far as proof of work, how the traditional mining consensus algorithm works. So I'm not going to really read that, but what I want to read though is the proof of access, this new algorithm created by a startup called Arweave. And it says here, Arweave is a startup that aims to change data storage on the blockchain. Projects like Filecoin and Storage act like a decentralized hard disk where users can store data and be rewarded in tokens. However, the data is not stored directly on the blockchain, but rather through third-party protocols. Arweave is working on a new way to validate blocks on the blockchain called proof of access. It's similar to proof of work, but it comes with a few important differences. Unlike POW, Arweave's method doesn't depend on the previous block only to validate transactions. Instead, it uses the previous block and a random block in the chain. They combine this method with their block weave structure, a new way of structuring blockchains. This way, miners don't need the entire blockchain, just one existing block called a recall block. Transactions in this recall block are then hashed against the current block to generate a new block, When miners solve the problem and find an appropriate hash, they can share the new block and recall block with the network. Interesting. So it goes on there. Here's a video about that. I'll leave a link to it, but I think this is pretty interesting. So the CEO, Sam Williams, said here on CNBC that what we've done is actually solve on-chain data storage. Unlike other solutions with P2P file distribution networks in the background and then settling of payment on chain, we have made a system of crypto economics incentives that allow you to grow the size of the blockchain to massive sizes and then distribute the data across all computers. Interesting. So we'll see what happens with this. I didn't know if you guys heard of this proof of access algorithm. These are the types of things you need to keep your ear to the streets on, because I'm telling you, what we see today is probably not what blockchain will look like in 5 years. It just isn't. Like, we're in the trial and error stage. We're growing, we're learning from the concepts that have worked thus far, but most likely won't be the ones that we use in the future. So I'm always looking at newer concepts, newer ideas, to just see what the future, get a glimpse at what the future is going to look like with blockchain technologies and these consensus algorithms. I want to tell you guys though, and I'll leave a link to this because this is interesting. On EOS, Dan Lemmer did a nice speech last year sometime, and it was called EOS Storage. And this is something that's going to be available on EOS. And when I heard this proof of access concept, it made me think of that. So I'll leave a link to that as well. You guys can check that out. The way that EOS is going to be doing the storage component to blockchain is pretty unique as well. You know, these types of new blockchains, Arweave storage, EOS storage, Filecoin. I don't know what Filecoin is doing nowadays. There's a lot of drama around them, but you know that these are the concepts that you're hearing now will probably be implemented in real world application here in the next 2 to 5 years. So got to keep your ear to the streets and always look for the next latest and greatest, because it just might be the future, people. Make sure you guys like and subscribe. Give me a comment about this Arweave project. Proof of access sounds neat. I'm going to look into it further. But yo, that's it for today, people. Streets is talking. Ha! I need to know.